Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on euro currency. Here everything mostly is going with our trading plan that we have discussed in recent few sessions. Many times already talked about and explained why this performance is a bit too much for a bullish market, and this performance is not typical for the bullish market as a response to the confluence area. It looks too heavy and just flat. This is not typical when the market stands in the confluence, and we have made the conclusion that probably market should show downward action. Now, as you can see, market is challenging once again this level. Chances that it will be broken seems not bad. It actually is moving lower. In general, our major target stands around 107, slightly higher, so we will see it on the hourly chart. But on the way down, you can see that's around 108.10 area approximately. We have daily oversold. And also it's very close to the 50% support area. On the euro currency it has the special meaning because euro currency somehow historically responds on the 50% levels very often. So I would say that it's most favored level for the euro currency. So that's why somewhere around 108 we could get some reaction, so maybe some bounce or something, retracement. But in general, based on the overall picture that we have, it seems that this action has the fundamental background. It's difficult to say whether this is already some fruits from the Middle East have come in Europe, and or it's just this anticipation, changing of the sentiment of the market, expecting the fruits in terms of the inflation, higher costs for the goods that are actually delivered by the sea to the Europe. But it's obviously suggests that well, it is indicates some weakness in the euro currency. And if you take a look at the dollar index, actually we have talked about this in the Telegram yesterday. Just take a look at the picture. You could see head and shoulders is moving really great, and since this is the index, this is combination of the basket of the currencies. So euro currency, Japanese yen, Great British pound, you can see the reaction. So this indicates some relatively more dovish position of the euro and other components of the index in relation to the United States dollar. This is precisely what we talked about in our reports in the recent 2 weeks, that we have some doubts that Fed starts cutting rate earlier than the European Central Bank. And so this just indicates this situation. On the dollar index, I would say even more, take a look. It's really great to see these head and shoulders and trade it, but take a look on this larger picture. We could get another one. Left shoulder, head, right arm, here with a greater ABCD performance, back on top, right there. This is absolutely was not expected by the market. If you take a look at the forecasts, that everybody have expected a weaker dollar just because the Fed has to start cutting rate in March, as everybody think, but we suggest that hardly this will happen in March. We already explained the strategy. So Fed right now has some reserves, including, by the way, the cash on the Ministry of Finance, on the Treasury accounts, which is around 700 billions. It also could use it for just stimulating liquidity, providing some liquidity for the market before rate will start cutting. And also some different topics exist around bond placement. So they need to support some demand for the bonds, place some bonds. So we'll discuss it in a weekly report this week. But in general, the idea is that this indicates the weakness of the counterparties of the United States. So with a potential significantly larger perspective, as you could see. On a 10-year yield, you also could see what's going on. Markets climb above 4% once again. And we see this ABCD pattern right now. The OP around 423, XOP 443. So this mostly stands in a row with what the Bill Gross said concerning the United States Treasury bonds. He said this is not attractive right now, as yields are too low. So we will see what will happen. But currently, obviously, this performance supports dollar, and at this moment, we do not see any reasons to changing the trading plan. Trend remains bearish. Divergence, by the way, suggests the taking out of these lows, which means that maybe our target will be completed. So on the follow time frame chart, I decided to put here the COP as well. It stands around 108.35, very close, and that's where it also stands very close to oversold. So maybe it's all some reaction together on the COP oversold and in general on the 50% support somewhere in this area. So if you would like to take the new short position, currently it will be not easy to do, and maybe it makes sense to wait when the market will touch at least some targets and oversold. In this case, some bounce could be formed. As a rule, market trying to retest the neckline, so this might happen, and it also could retest this broken 108 area once it will be broken. And this will be a just safe opportunity for taking the short position, because now it's jumping in with the unknown consequences. It's well, it's psychological, not very comfortable. In general, if we'll take a look at the hourly chart, here is we have great thrust, so maybe double repo buy here will be formed. It's very difficult, so you will have to just monitoring and trying to catch any patterns that might be formed here, suggesting that market should show some retracement and watch for some particular levels. In the current situation, it seems that maybe 108.90, 109.10, 109.15 seems interesting, where a theoretical bearish position also could be taken. Let's take a look. We're not considering taking any long position, but if you're a scalp trader trading on the intraday charts, maybe this one might be interesting to you, because here might be the double repo buy and suggest some pullback here, some retracement. So at least something to watch. We in general are focusing on a downside action, because we're mostly dealing with the daily trend, which is bearish, and currently we are not interested in taking some short-term bullish positions. So that being said, as a bottom line, those who have shorts probably could keep it, see what will happen. Just don't forget moving the stops. If you still would like to step in, we suggest that it will be better to wait for a more or less moderate pullback. So who knows, supposedly it should start somewhere from the COP to the upside, but if it will start earlier, let's see, maybe something interesting will be around this confluence. Maybe this will be some opportunity for taking the position. So for now, that's actually all that we could say about the euro.